Frontline stocks steady after an early dip, even though the broader market sees some weakness after a dip in US equities on Friday. FMCG and financials eke out gains, while energy and metals are the big drags today.
The 6,560 crore rupee public offer of Bajaj Housing Finance opens today. The company is looking to raise around 3,560 crores via fresh issue of shares. While the offer for sale is 3,000 crores, the lender's anchor book has drawn a very strong response from leading foreign and domestic institutional investors.
Hindustan Unilever has constituted an independent committee to chart the future of its ice cream business after parent Unilever's decision to spin off ice cream vertical by 2025. A sweet goodbye may be on the cards.
There's lots on the plate of the GST Council today. Prominent on the list is a review of GST levy on life and health insurance, a proposal to impose GST on payment gateways, the need for GST relief to give realty a fillip, and taking stock of compensation cess. Hello and welcome to Halftime Report. I'm Ekta Batra and with me is Mangalam Malu. Well, it is a day where we're just about consolidating in terms of the frontline indices as we speak. So we have the Nifty, which is just about higher by around 25 odd points. The mid-cap index, let's see whether there's any kind of recovery from the lows. So down around 0.6% at this point in time for the mid-cap index. And we have the advanced decline ratio, which is trending on the declining side. But specific stocks continue to attract attention. So we just about spoke about HUL, about the fact that they could be looking at their ice cream business in terms of, any kind of restructuring. So that stock is up around 1.3%. A couple of the banks are doing well because the bank Nifty is outperforming. So it's up around 0.5%. ICICI Bank, for example, is up around 1.3% at this point in time. So overall, that's what's taking place in terms of the markets. The broader markets could see more in terms of gains as of now. So that's the one which is a bit sluggish. Hi, Mangalam.
Hi, Ekta. There is consolidation. The mid-cap index underperforming. There is a firm gap between the number of stocks which are advancing versus the stocks that are declining. So we already have, nearly two stocks which are on the red side as against one which is on the green side if you look at the NSE. What's interesting, however, is that we're consolidating, but we've navigated through a lot all of last week, and today's dip was bought into. So that's something that the street would like. A lot on the street were fearing that maybe, after the big dip that we saw on the NASDAQ on Friday, there could be an impact on our own IT stocks as well. That's actually not the case to be. In fact, as we speak, a lot of these IT stocks are actually spiking. So we have TCS, which has moved towards the higher end of today's trading range. Infosys sitting with a gain of almost 0.89% odd as well. So those stocks are doing well. And secondly, the Nifty Bank, which has been an underperformer over the last 2 weeks, is pulling its weight behind and supporting the Nifty. Now that we've averted any sort of worry on the downside, the question is, can we go ahead and conquer the upside? Because the levels that we are at currently do have a fair amount of resistance. A little over 50,850 thereabouts will be the 50-day moving average of the Nifty Bank. And for the Nifty as well, 25,000 remains a psychological, resistance. So now that we've managed to, navigate through the accident at the lower level, do we go ahead and cross the upper level is the big question.
Yes, absolutely. And not to mention that, we're quite stable as compared to at least the global cues. And we have been showing that over and over again, despite, weak data coming in from the US and stoking fears of maybe a slowdown. India has been largely resilient in the face of all of that. But nonetheless, let's talk about one particular piece of news which was reported over the weekend, or on Sunday to be precise. India has reported its first suspected case of monkeypox after a young male returned from a country currently experiencing mpox transmission. The suspected individual has been isolated in a designated hospital and is in stable condition as of now. The Health Ministry has confirmed that samples from the individual is being tested for mpox and is being treated and contained in line with established protocols. To talk more about what the impact could be on labs in case they need to test, we have with us Dr. Nilesh Shah, who's the president of Metropolis Healthcare, joining in for a quick chat. Dr. Shah, hi, welcome to the show. If you could just start by telling us that are private labs ready to test for monkeypox, and have you all tested as yet, considering that it's been around for the past 2 to 3 odd years, but we're just talking about a more virulent form of it?
So the labs, not all labs, but few labs for sure, they are ready for it. So there are two techniques for doing a test for monkeypox. One is serological test and another is a molecular test. And molecular is the one which is the need of the hour and it's most reliable. And for molecular test, the kits are out and kit is available. We have already validated and kept it. Not on live sample, because live sample as of now, as per a rule of the government, as of now today, private labs are not permitted to do the test. But on backend side, the technology, the knowledge part, the technical training, validations, everything is complete and we are ready. We are awaiting government's go ahead to run the test.
Okay.
Right. And for the citizens, just wanted to know what price are these tests priced at, and typically, are you getting any inquiries for monkeypox tests?
Yes, there are few inquiries on monkeypox tests, not in large number, but few are for sure there. As far as price is concerned, it is yet to be arrived because there is no commercial decision as of now from even vendors at what price they will sell and all that. The price overall is a game of volumes also. We have seen during COVID time that as volume goes up, price goes down. It started at 4,500 and then it landed down to few hundreds. Here also similar. If at all the disease affects our country, and if testing starts and if volume goes up, the price will surely go down. I'm not expecting too exorbitant price anyway.
Okay.
Because the setup and everything is ready, and during COVID time, a lot of labs have adopted this setup. So it will not be scenario like what happened in COVID that, there are very few labs who had got trained manpower and the technology available. Here now, a good number of labs have adopted molecular tests. So it should not be that bad.
Okay. So when you say a good number of labs, a lot of labs also shut down post COVID-19 because there were no samples left. So in terms of molecular labs, how many do you think are available right now on the private side?
See, this will be my rough guess. I remember during COVID time, almost 4,000 odd labs, leaving government labs aside, private, I'm saying they started doing COVID tests, maybe more than 4,000. With high capacity, I'm talking about small capacity, could be a little bit more. But yes, as you rightly said, post-COVID, these labs could not sustain the setup because it requires that level of volumes and that variety of manpower sustainability and so on. And many of them shut down. But still, I believe that at least 400-500 labs still are doing molecular tests, and which is not bad to begin with.
Right.
Okay.
Dr. Shah, we shouldn't scare people around here, etc. But because it has happened in such quick succession to another pandemic that happens, the human mind wonders whether, is this one similar to that one? If you could give us a sense of what your, understanding of monkeypox so far is and the amount to which it can spread.
I think I would say one should not be scared. Being cautious is very important question on health, but getting paranoid and getting cautious and drawing parallel with COVID is not appropriate, I feel. It is not that bad.
Okay. All right. Dr. Shah, just wanted to ask you about the protocol as well. Because during COVID-19, what we did see is that even say whenever the private labs do start testing, if in case that is also the requirement, how similar or different will it be as compared to COVID-19 testing? Because the technicians had to wear PPP kits, they had to be completely masked up. There was a lot of, you had to be extremely careful in terms of the sample. Mpox is quite virulent as well. What are the different types of protocols that one will probably need to undertake as a private lab when there is any kind of collection of samples, if there is, from the private side?
So, see, the labs will be more engaged in sample collection, and there is only contact point with patient, and we must know first what are the 3 areas from where the infection can occur. So one is direct contact. Second is respiratory droplets, which may come out from the patient. So don't go too close to the patient without mask. And third is contaminated material from the patient. These are the 3 things to be protected. Now, hence, the guideline today are to wear PPE kit. But in COVID time also, it started with full-fledged PP kit and also it's not that severe, but PP right now is recommended while doing the collection of sample. Sample collection will be lesion where the patient is having blisters and so on. The lesion skin scraping, we have to take it, and this has to be brought in viral transport media in a septic condition in a properly designed boxes and bring it in a cold chain to main lab. This is what is going to be a protocol. So care definitely has to be taken. There is no escape over there. However, in COVID time, we had a lot of confusion about how the disease is getting transmitted. In monkeypox, that confusion is not there. These are the only three places. These are the three areas where one has to take care and manage the sample. And I'm sure the labs are well prepared because this we are used to doing it for many other things as well.
Okay, all right, Dr. Shah. Well, I hope we don't have to have these conversations either. But thank you very much for joining in and speaking with us and talking to us about the possibility of private labs testing for monkeypox if in case that does come about. We'll take a short break, but up next we'll be talking to Varun Gupta, who's the director of Ashiana Housing, to discuss their business. Stay tuned. Welcome back. Well, for the markets, there's an accelerated loss which is taking place for the mid-cap index, so down around 440 odd points. Good time then to get in a good handle on what's happening in the F&O space. Manglam's joining in for more. Manglam.
Well, the headline from the F&O space is there has been recovery from lows. The question is, where do we go from current levels? At what levels will the congestion come in? And that's exactly what has happened. The Nifty, while marginally in the red, has seen a big recovery from the lows. The Nifty bank is actually outperforming. The mid-cap index has seen an accelerated decline down almost 450 odd points. If you look at the Nifty right now, 24,838. What does it lie in about? It's the 20-day moving average, where it's found support today. It's reconquered that. 24,822 is the mark where there is support for the Nifty. However, on the way up there could be congestion. The Nifty bank, which is outperforming, is in this range of the 100-day moving average and the 20-day moving average. 100-day moving average was 50,241. The 20-day moving average, a little over 50,850, is where the Nifty bank is facing some sort of congestion. So that's the range that the Nifty bank is playing in as well. And looking at this and the movement of the market, the option writers, they're pretty active. For the Nifty, the fact that it's held on to that 24,800 mark has given put writers of 24,800 a fair amount of confidence to go ahead and write that, telling you 24,700 would be an important support to track in the market itself. The 24,900 put writers also pretty aggressive, and that gives you a belief that 24,700 to 24,750 would be the support zone for the frontline index. However, on the way up, there is still some sort of congestion around that 25,000 mark, psychological, and also a lot of calls written at the 24,900 mark itself. A lot of stocks in action today, and the one that I'm looking at is Vodafone Idea. A fair amount of long positions being unwound. Nearly 25% of the open interest has reduced on this counter. The other one that I'm looking at is Apollo Tyres as well. Hasn't fallen as much, but there is a fair amount of unwinding of positions, telling you that there could be some sort of short covering out there. So those are a bunch of stocks today from the F&O pack.
Okay, all right. Thanks very much for that, Manglam. So that's on the entire F&O setup. We'll take a short break. As promised, next we will be talking to Varun Gupta of Ashiana Housing.
Welcome back. Real estate, that's been the buzzword over the last couple of months, a couple of years as well, where we've seen a bit of a cycle, and all these companies are launching projects, are managing to see a fair amount of these turning into sales as well. One of them is Ashiana Housing. They've gone ahead and booked 168 units out of the total 280 in the phase for their project called Ashiana Amara, located in Gurugram, which is a sale value of close to around 403 crores. So to discuss this and more, we have Varun Gupta, who's joining in. Varun, thanks a lot for joining in. You've got EOIs into sales of close to around 403 crores. How quickly do you expect to sell the remaining units? 168 have been sold, 280 currently, and at what price? Current 168 have been sold at 404 crore. So how much higher could the next be?
So we expect the remaining units to be gradually increased prices as we go forward. So I don't know exactly what pricing they will have, but we'll keep increasing prices every few months or even faster if as in the way the sales progress. And the pricing actually in phase 4, the biggest thing was we got very good pricing. This was more close to 25% higher than phase 3, which was launched just at the end of the last financial year. So in let's say a span of 5 months, we were able to ramp up pricing that high and got really good demand against that. So I think in this financial year, I'm hoping to sell off everything of phase 4 and launch phase 5 as well.
Okay. The reason why I ask you that is because if you just do quick back of the envelope math, your current realization per unit of the 168 that you've sold at 404 crores comes to close to 2.4 crores. Assuming the next 112 are sold at a 25% premium, as you pointed out, as compared to phase 3, then this could yield anywhere between 300 to 350 crores, 336 crores to be precise. Is that a number that is far out of expectation, or that is a number which is gettable in this year itself?
Okay, so a 25% increase on these prices, I think, is out of expectations, because if you look at Amara phase 1 to phase 4, we have gone about 2.3x in pricing already. But that said, I think this we should look at about 300 crores of revenue coming in from the remaining 112 odd units, maybe a tad bit lower, but that's what my expectation.
So that's about a 10% increase.
Okay, all right. Varun, just wanted to get a sense in terms of your entire target. Your sales were around 2,000 crores. That's what you've guided to the market via an improvement in terms of mix of volumes and realizations. Are you on track, or based on what you're seeing, are you looking to probably even exceed it?
Yes, we are on track to achieve it or exceed it at this moment in time. The market is good. We are doing well, and right now things look very, very good.
So can you tell us what the pipeline is in terms of projects for you to probably achieve that 2,000 crores? What are we expecting in terms of incremental sales from you?
So, we are launching one project called Ashana Swarang in Chennai, which is a senior living project. Outside of that, we have phase launches. As I said earlier, we expect to launch phase 5 in the last quarter of this financial year for Amara. We are launching the new phase of 144, a phase in Malhar. We expect to launch a phase in Amod. So we have multiple projects where new phases will get launched, and a new project in Swarang in Chennai for sophisticated senior living.
All right. What about the land that you have on your books right now? As per the Q1 FY25 presentation that you had close to around 66.5 acres of land available. So how many land parcels are you eyeing in the next couple of years, and what's your current net saleable value that you are sitting on?
So current net saleable value of unsold units is around about 8,000 odd crores put together. Unsold stock in launch projects to future phases, land bank, everything, excluding one land, which is Milakpur, which is under litigation. So we don't have a line of sight on that particular parcel, but I exclude that. We have about 8,000 crores of saleable stock. And as of June, we had sold about another 3,000 crores for which revenue has not been recognized. So I think overall potential revenue recognition over the next, let's say, till about 31st March 30 is about 11,000 odd crores, putting these two together. We are also working on multiple land parcels. I hope to close probably 4 transactions this financial year. We closed one in Jamshedpur. We are actively engaged in 4 more transactions. I hope that maybe probably 3 of those 4 will definitely should conclude in this financial year.
So these 3 out of 4, what would your outflow be in terms of acquisition, and where is it? Because you were looking to get into Jamshedpur, you mentioned Jaipur and other smaller cities.
So we are we concluded a Jamshedpur transaction, and which we disclosed to the stock exchanges. We have ongoing talks in Panvel, in Bangalore, and in Jaipur. I hope to conclude all of those. All of those will be funded through internal accruals itself. We might, and we will put them on the platform with IFC, where we have a platform with them to provide capital for project acquisition. So either, so if it's a JV, it will be completely on our own, and others will go on the IFC platform. The overall outflow would, I don't think for us, we'll need to raise any other external capital outside of IFC right now.
Okay.
All right, take that point. Thank you so much for joining in and giving us the outlook on your business. Wish to connect with you once you sell the remainder of this project as well, and at a promised near 10% premium to the first 168 units at which you sold in this business. Take a short break. On the other side, an interesting discussion lined up for you. It's a conversation with Prem Pavoor, who's the senior partner at 8 Road Ventures, to talk all about their $250 million healthcare fund and, more importantly, growth opportunities in India.
Welcome back. Well, flat for the markets. We have the mid-cap index, which is under pressure, so down around 0.8%. The advance decline ratio has a lot to long for today. So advances are around 1,400 and declines are around 2,600 plus. But let's talk about, let's shift our focus and talk about a global venture capital firm, 8 Roads Ventures, which has a dedicated 250 million healthcare and life sciences fund for India. They recently held their third edition of their annual healthcare conference, Scale Up Health, with the theme of disruptive trends for 2025 and beyond. To talk in detail on the growth opportunities in India and their investment plans, we have with us Prem Pavoor, who is a senior partner, head of India and healthcare investments at 8 Road Ventures, joining in. Prem, hi, welcome to the show. Well, first, just wanted to get a sense in terms of the recent conference that you held, Scale Up Health. There were a couple of various topics which you all spoke on, CDMO, oncology, as well as, weight loss drugs. From your perspective, from an India standpoint, India pharmaceutical standpoint, which is probably the biggest trend to watch out for, which is going to add profits to the table?
First, thank you for having me on the show. And it was nice to see such a well-attended conference. I think it's our third year of the conference, and the life sciences and healthcare community only seems to grow from strength to strength. I think of the three topics, the one that has the potential to be most needle moving in the near to medium term is perhaps the anti-obesity opportunity. Perhaps less from a profit perspective for the Indian pharmaceutical companies, but much more from a global perspective. I also believe that the trend will have spillover effects into some of the other aspects that India can support, like contract manufacturing and patient services and safety surveillance, clinical trials, etc. I think the second big opportunity is the CDMO opportunity, given the increasing geopolitical tensions and also the impending biosecure legislation with the US Senate, which can be quite game-changing for the Indian development and manufacturing sector.
So on the Biosecure Act itself, what kind of impact do you think it could have on the entire space and in India, for India in particular?
It's a good question. I would say that, perhaps we'll not see any immediate term change, though as you poll well-established and high-quality biopharmaceutical companies in India, they are all seeing an increase in proposals from the big pharma companies as well as the small biotechs. I think most of the customers in the US and Europe, from our conversations, are adopting a wait and watch approach to see where this legislation plays out. But I think it is safe to say that, irrespective of the legislation and just given the geopolitical uncertainty, it is highly unlikely now as a customer in the US or Europe that you will put all of your eggs in one basket. that you will look to diversify your sources beyond China, and India is the obvious opportunity. So I do believe that you will see a lot of spillover into India. I think the question is whether the Indian contract development and manufacturing firms are ready with infrastructure and services to be able to provide and cater to this large demand.
Exactly what I wanted to ask you, Prem. We've spoken a lot about the possible opportunities, but all of the companies are saying that they still currently have queries, and it's still not changed into, tangible business. That's one point. But do you think India is just far too behind when it comes to technology as compared to, the South Korean companies of the world, or even Europe and US, which is emerging as a hot opportunity when it comes to CDMO?
I think you made a very good point in that if you look at the large manufacturers, and let's take the example of the anti-obesity drugs, the large manufacturers, interestingly, are looking to insource manufacturing as opposed to outsource it. But there are plenty of other smaller biotechs who still don't want to invest in capacity, who are still looking for a high quality, reasonable cost destination. And the reality is that, whether it is South Korea or other parts of the world, they just will not be able to absorb all of the spillover from China. So you will see some positive ramifications from an Indian context. I think it's very hard for Indian companies to set up, as we call it, put steel in the ground overnight. I think it will take time. But where Indian companies can do well is to differentiate on their offerings. For example, we have a partner company called Enzene, which is a subsidiary of Alchem, and that offers a continuous biologics manufacturing platform, amongst the first globally to customers. So those types of offerings will help India leap up the curve in terms of taking share.
Prem, let's shift focus away from your conference now, because you have an interesting portfolio. While you don't invest directly into listed companies, you have some kind of investments indirectly in them. One of them, interestingly, is Bicara Therapeutics, which is basically an associate company of Biocon. And it's expected to go public soon in the US markets. Give us a sense in terms of what exactly does the company do? How much do you have invested? Are you exiting via the IPO? And what does it bring to the table?
Bicara is our second partnership with Kiran Mazumdar-Shaw, both on the innovation side. Our first one is a CAR-T therapy company called Immunil, which is offering a CAR-T therapy for Indians in India. Bicara was our second investment. It's an interesting example where a novel drug and the IP was moved from India to the US so that you could create a best-in-class team in the US and take advantage of the US-India corridor, India for some activities and the US for others. What's most compelling about the company is that it has in its pipeline a drug which has the potential to be a best-in-class drug for treating head and neck cancers. And so the company has filed an S1 to think about a listing on the NASDAQ. We invested largely about 12 months ago as the company was, still generating data. So it's actually good to see a world-class asset coming out of India. Some of the other details, unfortunately, Ekta, around the IPO are confidential, and given strict US laws, I'll probably sort of talk to you about what's public if it's okay.
Right. Finally, before we let you go, what's interesting, I like a couple of things in your portfolio, and it all circles back to the point that you made first, which was about the opportunity that the weight loss drugs could have for the global pharmaceutical industry. While it may have, a solid reason when it comes to health, etc., you can't take away from the cosmetic aspect of this possibility. And that brings me to your investment in one, Toothsy. And secondly, I'm sure there are a lot of these, beauty therapies that people are looking at when it comes to de-aging and looking a certain way as a business opportunity. Do you have any, investment plans out there? That's point number one. And secondly, on muscle rehabilitation, that too is a growing opportunity as people are, injuring themselves more while they work out a lot more.
So again, both excellent questions. I think in general, aesthetics, but with a clinical bent, has been a key area of focus for us. And Toothsay is a great example in that it's a market leader in providing aligners to the Indian population at a very effective price point. And it's able to do that because it's full stack. I think we are, as investors, very clear that quality is sacrosanct, and Toothsay has a platform where it starts right from 3D printing aligners to providing aligners to patients. So I think that's one example. The second example is a nutrition business that we are partners in with Unilever called Oziva, which provides a range of nutrition products, some with a beauty element, to customers. So those are the two that we have. We continue to look for interesting ones, finding a balance between an unmet need and also being able to provide the highest quality product. In terms of your second question, pain in general, I think, is a growing area globally as an unmet need. And I think everyone now is aware of physiotherapy and the need for it. We have an investment in India in a company called Healthcare at Home that sends physiotherapists home to patients. But we also play the US market opportunity through one of our India for global companies called Spry, which has a software platform for US physiotherapists and for their clinics, which is seeing significant traction in the US. So those are the two ways that we participate in that opportunity, but one that is here to stay and grow.
Okay, just before we let you go, Prem, you have less than 2% or just about 2% in API Holdings, which is basically PharmEasy. Tell us, what is the plan with that? Are you planning to exit entirely? Are you sticking on to your investment? And what is the cumulative amount that you've probably made or lost in that particular investment?
No, hopefully, we've only made money on PharmEasy. We were early investors in the platform, and it's one that we tracked the sector for 6 years before we made a bet, and we're very happy with the bet. We were early investors. We did de-risk the investment a bit in 2021, and we continue holding it for the long term. It's a company that has turned a corner very effectively and now focused on profitable growth with a very good team. It's a team that we've had a lot of conviction in over the years. So a very happy and significant from a dollar perspective position for us, Ekta.
An intuitive follow-up on that, because pharmaceutical went to e-commerce through PharmEasy, etc. Now everyone's moving to quick commerce. Are there any bets out there, a medical company or a pharmaceutical company dabbling with quick commerce, given the sort of rise that we've seen in Blinkit and Swiggy's e-commerce ventures?
Not yet. I think the quick commerce opportunity is an interesting one, both for acute drugs, maybe for chronic. But I would say that, today we haven't seen anything that is scaling at that level on the quick commerce side. Most of the neighborhood chemists and pharmacists also provide an element of quick commerce. But I think one to watch out for, I agree with you.
Okay, all right, Prem, we're going to let you go on that note. It's a pleasure. Thanks very much for joining in and speaking with us in terms of your whole list of investments, as well as the ideas and themes that you're proposing within the entire Indian healthcare space. We'll take a short break. On the other side, Manisha Gupta will join in. She has with her Peter McGuire.
Welcome back. Let's take note of all the things commodities, and Manisha joins in with that. Manisha.
Thank you so much for that, Mangalam. And joining us now is Peter McGuire to talk all things commodities, rather all things metal. And we have seen further decline come in for this sector. Peter, thank you so much for joining us. And I want to start with a copper, where we've seen 2 weeks of declines, and an aluminum, which is trading at a 2-month lows, and an iron ore, which is trading at a 1-year lows right now. Well, we have seen most of the economic data come in on the weaker side, especially China, and that really seems to be weighing on, would you say?
Absolutely. Lovely to see you, Manisha. And a couple of things I just want to add to that. And the CSI 300 nearly at a 5-year low. So it's structural weakness across the Chinese equity markets. And that's really showing you internal what the situation is there, I'd say. And then naturally, you've got weak demand globally for finished products because people are tapped out with credit cards. And I think how China plays this is going to be quite fascinating. So, yeah, whilst I would have thought that maybe copper may have bounced a little bit higher, it's back through 9,000 and it seems to be one-way trade at the moment, Manisha, bearish.
Oh, yes. So how much bearish do you think it can go from here? And do you see any buying opportunities on those dips?
Oh, there'll be buying opportunities, but we've got a lot of big global themes that are going to play out over the next 2 weeks and really up till the end of the month. First off, ECB decision as far as Wednesday. What you're doing as far as Fed this time, well, next week, whether we see 25 or 50 basis points, how cooked are the stock market's going to be, what action are we going to see as far as energy markets, and naturally rolling that across to base metals, and then a possibility even of, US government shutdown at the end of the month. So there's a lot of big themes that have to play out, and there's always times to just take it very, very easily because markets are very volatile at the moment.
So, Peter, as you said, in 2 weeks, we will have the US Fed meeting. November is US elections, and the markets will look at a whole host of data between all of these events as well. Of course, the guidance, the size and the speed of rate cuts also. What is it that you would want to watch out before you take that concrete directional view on metals?
I want to see, Manisha, first off, what how everything stacks up as far as Eurozone, what happens as far as Fed Chair Powell, where do equity markets trend over the rest of the month? And then, as you said, less than 2 months out from an election. And I think that there's just seems to be a drag to the bottom at the moment, softening. And crude prices also, with WTI is, 67, 66 going to be the new floor. And then once you see that, then there might be a time. But there's just so many big themes, again, have to play out until you actually see where the market takes itself. And I think for every retail trader out there, be careful and hedge your positions.
All right, Peter, thank you so much for giving us that insight. Manisha, thank you for taking us through with that conversation. We take a short break now, come back on the other side. We focus on the markets and some flashes that came at the bottom of your screen when we just started that conversation. Well, while the market is consolidating, the Nifty flitting between red and green, just keep an eye out on the FMCG index. The FMCG index has now moved to the high point of trade, a gain of almost 1.5, 1.6 odd percent. That's largely led by HUL. HUL has been doing well all through the morning and now has only extended those gains up to around 3 odd percent. Maybe the street is factoring in some sort of development on their ice cream business very soon, largely because the company has gone ahead and constituted an independent committee to decide the future of the ice cream business. As per Unilever's timeline, they are likely to speak on the future of how they will separate the ice cream business from the overall company by end 2025. And time and again, Rohit Java has told us here on CNBC-TV18 that they will be well within the timeline itself. Add to that, you have the prospects of improving demand, which is actually doing well for all the other companies as well. ITC, for instance, up around 1.5%. Tata Consumer is the other one, which too has moved higher. And Berger Paints is the other one, which has followed gains of Asian Paints that we saw all of last week. In the other parts of the market, we're seeing some traction in names like Dabur as well, which is up around 2.5%. Honeywell has, moved higher from lows, currently at the high point. And we've also seen some traction come by in names like Voltas, which has seen a big move already in this year itself. Finally, when we started the last segment, we had, numbers at the bottom of your screen for the IPO of Ather Energy. Close to around 3,000 crore IPO is what the company, or papers, is what the company would have filed as per reports coming in on Bloomberg. With that, we'll take a short break, come back. On the other side, we'll have the team of Business Lunch take all the market action ahead. Thank you for watching.